Alrighty, guys. Welcome to tonight's session. Hopefully, everybody has been having a good day. Now, it is a little bit hard maybe to have a good day. We have been having a bit of a struggle this week, so we're going to talk about that. Talk about a lot. We're going to be going into the mindset of that, right? Especially coming from me telling you guys, right? I've been trading 4 years, and sometimes this happens, right? Sometimes you get a week. Sometimes you get good weeks, and it's being able to control your emotion during those times and the best way to get through those times, right? So we're going to talk about a little bit about that. We're going to go over the trades we took, what we did right, what we did wrong. We're going to talk about markets in general, and then we're going to talk about what we're looking at going into tomorrow and just kind of the rest of the week. So first thing I want to start off with is just looking at ES here. So again, looking on ES, we went into today with a bullish bias. We have this daily fair value gap. We ended up getting bought up, right? Market structure shift on the 4 hour. We come back into this 1 hour breaker block. We now have that draw. Again, still expecting all of this to become low resistance. So I am expecting still more upside, possibly even taking out this high here being our external buy side. Now, I still think the draw, we've now come into this daily fair value gap. So I'm going to be watching to see how we react at this area since we are in this daily fair value gap. And it's actually a BPR. We actually have two fair value gaps. We have an inverse fair value gap here and this bearish fair value gap here. So we'll see if we end up rejecting this, possibly seeing more downside, especially now after these highs have been swept. We're starting to kind of form SMTs going into the highs on ES. You know, we kind of are following this trend line, so possibly could see a break lower to come back down into this 1 hour breaker block as well as this low. So going into today, I was watching for the sweep of this low here, and I had my bullish bias. I was looking for two things. I said in the pre-market analysis that I was looking for either we come down, sweep this low, and we continue lower, and then reject this as inverse, and then I would expect the draw to be lower. But if we end up coming down, sweep this low, and then have displacement up, I could expect the draw to be that previous high, which is right here. So looking at ES, markets open. We rally, have a lot of buying pressure on ES at the open. We come down, put in a low, big move back up, right? At this point in time, we have the 5-minute fair value gap starting to play out. We've swept this low, having big displacement back up, right? What am I expecting the draw to be? I'm expecting the draw to be higher, right? Possibly that previous high. We come down, continue to hold this 5-minute fair value gap, and we end up forming this SMT here. Now, once this SMT forms and we get big move back up, I see another fair value gap get created, and I look to take a long in this fair value gap. Now, this to me is an A+ setup. This is everything that I want to see. I have external swept on a bigger time frame. I have market structure shift on a bigger time frame. Pull back to 5-minute fair value gap. I wait to see the hold of the 5-minute fair value gap. We have an SMT at the lows. We get an internal market structure shift. We get a pullback to a discounted fair value gap, right? This is exactly what we want to see for a high quality setup. Now, I enter in long and I end up getting stopped. Now, what can we learn from these trades, right? Now, I'm totally fine taking this loss because this is a loss I know that most of the time I'll be rewarded for, right? Now, the problem this entire week has been no correlation between ES and NQ. Looking at NQ at the time, or this entire day pretty much, the draw on NQ has been lower. NQ has had a bearish structure the entire day compared to ES, and that has been something that has been throwing us off. That's why every single morning, it seems like this entire AM, for the entire week so far, we've been having very kind of choppy, concise action. If we look at the 5-minute, you can see we kind of get stuck in some sort of range and start to, you know, sweep highs, sweep lows, all that internal low and highs starts getting swept, and we just, you know, keep moving back and forth, and then we get some sort of expansion move later in the day. But in the AM, we've been getting very choppy in, you know, range-bound action. So looking at NQ as well, we ended up taking a trade on NQ in the morning. We tried taking that long. Now, I originally wanted to take this long on ES. Again, same thing looking here. We have liquidity swept. We have displacement back up, a nice fair value gap. Looking at ES, I was looking to take a fair value gap, or this long entry here. We ended up not coming back into this, but we did come into this little small fair value gap here and then ended up bouncing. That would have been a nice long, but I failed to catch that. When I saw ES started to rally, I was expecting NQ to go with it. So we come down. We swept internal. Big move back up. Market structure shift. Good displacement. pull back to the fair value gap. We reach back into discount as well. Right here. We get an initial bounce and then end up breaking through this. But notice, again, ES showing all of the strength, big move back up, and NQ just cannot seem to get any sort of buying pressure to the upside, which is kind of weird because most of the time when we come into these days, a lot of the time it's reversed. NQ is the one that gets, big moves like this and is showing a lot of strength. And I was expecting to see that same outcome today, but unfortunately, NQ draw, this showed us that we wanted to go lower. We had a lot of selling pressure. We were looking very weak on NQ, and I ended up getting stopped somewhere around these lows. Once we ended up coming down and stopping me out, I was expecting to see some sort of sell-off to take out initial lows and see lower, especially after seeing the action on ES. If ES is looking super bullish and NQ is looking super bearish, at that point in time, it's just going to be which one's stronger, right? If both ES and NQ are not correlating, you can expect to see very choppy and trappy action, right? So I actually ended up seeing another setup that I didn't end up taking this one. And I think the reason is it was right after this loss. I was a little bit shaken up, and I didn't really want to enter. I was kind of just done trading this action for in the morning. Again, after getting stopped out this week, that's where we got to talk about psychology in this charting session, because this was one of the worst weeks this year for me. And in my win rate, I just could seem like it just seemed like I was just getting stopped out and I couldn't take a winning trade. And I know that you guys feel the same way. A lot of the times, right, that happens to traders, and it's a part of the game, right? You have to recognize what you can fix, what you can't fix, and what you're doing right, what you're doing wrong. And in this certain case here, when I got stopped out, I just decided to call it there. Again, if I'm getting stopped out twice in the morning, I normally like to call it there. I don't want to give, anything more. Market's not, in my favor, and so I'm just going to stop there. Even if I saw this good setup afterward, and I still was just tired. I didn't want to take a trade, and I just decided not to. So this was the setup here that I was going to take, but I decided just not to. Again, after I got stopped out, we could see we swept this low here on ES. Now, at this point in time, looking on NQ, though, we had this low formed here, and we were actually forming SMT with this low here. ES never ended up breaking this low. We're forming higher low, NQ forming lower low. Once we got this initial bounce up, right, displacement back up, as well as still continuing to hold this 5-minute fair value gap, right? We're still holding this 5-minute fair value gap. We don't get any candle close below this. Actually, we kind of get a candle and then instant buying pressure back up, but that's telling me that we're still holding on a bigger time frame, as well as we have this 1-minute fair value gap here. So we're still holding PD arrays. Once we get displacement back up, again, most of the time, if we get an SMT, I like to take that first fair value gap, as well as we have this inverse fair value gap here that we continue to hold. I was looking to take longs here, targeting first being these equal highs and then that buy side, and then you could see we ended up just running up straight towards that buy side level after getting that stop out. So again, tough action this week. It has been very mentally straining for some traders, and even on me. If I'm being completely honest, most of the time, I'm very very strong mentally, and not a lot of things will get to me, especially trading after this amount of time. But there does come times here and there where I will get shaken up a little bit, and this week kind of has shaken me up, especially when it just seems that a lot of the times we're just getting stopped out. And again, it's part of the game. It happens. Even the best traders in the world will go through losing weeks, right? It's how you learn from them and how you position yourself to not get hurt too bad by them, right? Now, like I said, I'm down around $10,000 on the week. I'm up last week around $12,000, so I'm still up around $2,000 in the last 2 weeks, and that's kind of my viewpoint of looking at this, right? Even though I've taken a lot of losses this week, I know in the long run, 2 weeks is really not going to affect much in my journey, right? I still have a lot of time towards the end of the month. I'm still green on the month. I'm still going to end the month most likely green. Hopefully, I'm not going to jinx it, but we got one more day. And you have to be able to get through weeks like this and not be too burned by it, right? That's why position sizing and risk management is so important, and that's when it really comes into play, because sometimes you're just going to constantly get whipped around, and it's going to feel like, your edge is broken. You're going to feel like your strategy is broken. You're going to feel like you can't take a single, winning trade. You're going to feel like you're the worst trader of all, and it happens. It happens, okay? You have to be able to realize that it happens, and you have to be able to also realize that Sometimes it might not be your strategy. Sometimes it might not be something you think it is. A lot of the times it just might not be recognition of conditions. There's a lot of different things it could be. Now, my job is to help you recognize those things. Now, a lot of the time, if you had, if you go into this week, let's say, a lot of the people in here, let's say you traded this week on your own, right? And not with me. Or let's say I traded this. Well, let's say you guys don't have as much experience, but let's say you went in this week and you had as many losses as you did, and you didn't have anybody else saying anything otherwise, right? You would think that your strategy is broken, right? You're trading good setups. You're trading all these things, but you keep losing. You would think that your strategy is broken, and then what happens is you would end up dropping the strategy or trying to figure out something else, ruining, what you've been working on instead of, trying to master what you've, already know. And then you reset that cycle. And that was the biggest problem for me when I first started trading is I would have an edge, have success with it, have one bad week like this, and then think my strategy's broken, and then totally just reset my learning curve with trading. It took me 2.5 years to become profitable, and I think that was one of the biggest reasons why it took so long is because I would learn a strategy, and right when it stopped working, I would automatically think it was somehow broken, and I would blame the market instead of, looking back in my journal, looking at market conditions, and actually figure out what the actual root cause of the problem was instead of just blaming it on the market. So now that we can actually see, and you're with me here, I'm telling you guys right now, our strategy is not broken, okay? Our strategy is not broken. Because every sort of thing that is aligned today has actually fit our exact model. Looking at this, looking at a bigger time frame, 5-minute. Low gets swept, displacement back up. 2022 model right here. We pull back into, discounted fair value gap. What do we expect to see? Buy side. Okay, perfect buy model. That just played out. And that's been the case with every day this week. Just the problem that has been the biggest problem for us this week is the action in the AM and the non-correlation between ES and NQ. Now, looking back for me, I have to realize and say, okay, now what can I do to improve on this? Now, I think my biggest problem, or what I'm taking out of this week, is the biggest thing I'm taking out of this week is when there's no easy correlation between NQ and ES, when there's no, when one's bullish, one's bearish, and we continue to see fair value gaps, inverse fair value gaps, any sort of PD array get disrespected on a smaller time frame, that to me is a sign to not take a single trade. Even if the setup looks good, you have to have the discipline to recognize that it's not an A+ setup if market conditions are not in favor of your trade. Right? It's not an A+ setup. So you have to have the discipline to sit there and not take a trade, even if it looks good, recognizing market conditions are not in favor of whatever your bias or whatever your bias is, right? Again, as traders, we're trying to make a living. We're trying to, this is our job. You have to start treating it like a job. I'm not here to click buttons all day. I'm here to be patient and wait for solid setups, right? That is going to make me money. That is going to be the reward. Now, solid setups might appear, but if you can't recognize the market conditions and what's going to actually reward those good setups, then it's eventually going to fail, right? So the biggest problem this week was understanding or failing to recognize. Well, it's not really failing to recognize. It's just failing to take into account and actually use it to our advantage that markets are discorrelated, right? Instead of, taking trades, it would be best to sit on hands, watch the market, wait for clearer action, clearer conviction, wait for the market to actually correlate with each other, and then take a trade, right? That was our biggest problem going into this week. And that's going to be my biggest takeaway coming out of this week going into future endeavors, right? Learning from our experiences and our failures is what makes a good trader from a bad trader. The traders that came into this week and have taken losses and are not using them to their advantage, instead blaming the market, instead blaming somebody else but themselves, right? You have to be able to look at those things, come back, say, okay, you know what? Maybe I did make this mistake. How am I going to learn from this, right? Okay, I'm going to learn from this by taking accountability for it, admitting that I made the mistake. That's number one. Admit you made a mistake. Because guess what? That's fine. It's okay to make mistakes. You're learning. We're constantly improving as traders. You should want, God, that voice crack. You should want to learn from their mistakes, right? If you want to actually improve as a trader, you need to look back at any sort of mistake, even if you're doing something good. Even if you're doing something good, you need to look back and say, okay, I actually did something good. Let's keep doing this. And let's not keep doing what's, bad and what has been causing me to lose, right? So, price action today, again, following the trend this entire week. Very, very choppy action in the AM. and it starts to smooth out later in the day. Again, look at the previous day. Very, very choppy action in the AM. Smooths out rest of the day. Looking before, very, very choppy action in the AM. Then trend move, right? Every sort of day. Again, look at this. Very, very choppy in the AM. Then big move. So we've been getting a very repetitive sort of action this week where we've just been getting very, very choppy action in the AM. And normally I trade AM, right? Most of the time I trade AM. I don't really like trading the PM. Sometimes if I trade PM, I'll take a setup here and there, but I won't do my, live sessions. I like taking advantage of AM volatility. And recently we've been having a lot of choppy action. Now this could be a result of multiple things. It could be number one, we're going into a bank holiday, right? Number two, it's ending of the quarter, right? The month ends this week. So, we're switching over. It's the end of, right? It's the end of the quarter. So everything, there's a lot of things that it could possibly be, as well as just, the charts. Sometimes we get good conditions, sometimes we don't. And you have to be able to recognize that. Sometimes there's not always going to be a clear reason, right? Something I've learned from, trading for years now is sometimes you just kind of have to stop trying to figure out the reason for certain things and just recognize it and figure out how you can use it to your advantage. And that's kind of something that I've figured out. And a lot of the times I recognize there doesn't really have to be a specific reason for the market to do anything. The market will do whatever it wants to do. If it'll be choppy, it'll be choppy. There doesn't have to be some sort of news event for it to be choppy, all right? Markets move in waves, accumulation phase. There's, expansion phases. There's always going to be some area or some point in the chart where we're going to get not good action. And that's okay. That's how markets move. It's being able to recognize those things and choose whether or not to take a trade in those. Because if you're trading in those sort of market conditions, of course it's going to be lower probability, right? It's just up to you to actually have the discipline to not take a trade. Even if the setup looks good, you have to have the discipline to, okay, even if the setup looks good, okay, maybe trade lighter size, right? If that. But you have to have the discipline to say, do you want to take good trades? Then that might be a lower quality trade if you're going to, take a setup like that in, bad market conditions, right? Now, one thing that I've learned as well that I want you guys to pay attention to is ICT traders recognize, I want all you guys to pay attention to this. If we come into a day and we come into the AM and market opens and every single PD array is getting disrespected, that means we should not trade. Okay? If we come into the day and every sort of PD array is getting disrespected, that means we should not trade. What do I mean by this? This means this. Let me draw this out. Let's say market opens. We get a big move up. All right, big move up. Wow, cool. We're pulling back. Let's say we have, a bearish or a bullish fair value gap here. All right, we have, maybe a market structure shift. All right, dope, right? Wow. And then we end up, boom, breaking right through this. All right, okay, wow, what do I expect here? Maybe this low, right? This low here, right? All right, I would expect, maybe this to become inverse fair value gap, right? Boom. Pull back. Oh, wow. Boom. Oh, wow. I maybe expect, this to become the draw. We just broke through this inverse fair value gap. Oh, wow. We actually have another fair value gap here. We just broke to the upside, right? What would I expect? Okay, I would expect the draw to be here. And then, boom, breaks right back down. Okay, now what do I expect? Maybe the draw to be here. All right. Okay, now we have a fair value gap. All right, maybe say we come down here. All right, we come down. Maybe here. All right, now that we broke this low, I'm maybe expecting us to bounce. Wow, there's no fair value gap here. All right, we bounce. All right, now I'm expecting draw to be higher. Oh, psych, maybe let's go lower. Every PD array that we see, any fair value gap just gets disrespected, absolutely ran through. Inverse and regular fair value gaps, right? This becomes inverse, and then we break through it. Like, this is the action. When we can recognize this, and we can recognize that PD arrays, fair value gaps, order blocks, liquidity, everything that we trade off of is getting disrespected, that is unfavorable market conditions. That is the easiest way. If you want to figure out what's favorable market conditions and what's unfavorable market conditions, the easiest way to recognize that is looking if PD arrays are getting respected or disrespected. That is the easiest way, okay? I want everybody to write that down. If you want to figure out what's favorable market conditions versus unfavorable market conditions, if you can find PD arrays getting constantly disrespected, you probably shouldn't take a trade, okay? Exactly. If you find yourself in a trade like we did today, right? If you find yourself in a trade and you are in the middle of it and you're like, man, this action is fucking awful. Market conditions suck. The only thing you can do is stick to your plan, either cut those losses short, take it off, right? Recognize the conditions and say, you know what? I don't even want to hold this, because that I am totally fine with that, right? Normally I would say, there's only two outcomes, right? Your price target or stop loss gets hit. But in specific action like this, where you see every sort of PD array get disrespected, and you're constantly looking at bad action and you can feel yourself starting to get anxious, possibly starting to get stressed, take off the trade. Take it off and just walk away. That's the biggest thing. You have to have discipline to recognize your state of emotion, recognize your psychological state, and be able to disconnect yourself from whatever situation or whatever environment you're in. If I come into the market and I find myself constantly getting stopped out and my confidence starts to get lowered and I enter a trade and it's super choppy, everything's getting disrespected, and I can feel my emotion coming on, I'm getting super anxious, I'm getting super stressed, I can feel myself shaking, I'm just getting frustrated. That is when you say, you know what, fuck this. I'm stopping out of my trade. If I'm in profit, I'm just going to take it off. If I'm, a little bit off, I'm taking off a break even, and I'm just going to stop. I'm just going to stop trading for the day. Because at that point in time, you are stopping yourself from creating a huge, huge mistake later on. And being able to recognize that and have the discipline to step away is something that takes years. It takes a lot of time to have that kind of discipline, to be able to recognize that, stop, and just walk away. Because it'll mess with your mental. Again, trading is 90%, 80% psychology, right? If you don't have the mental capacity to sit that, and if you can recognize yourself starting to become stressful, starting to get anxious, you should not trade. Because that means you're, number one, either over-leveraged, you're, number two, not have confidence in your strategy, and number three, you're recognizing market conditions and know that your edge is not going to, play out with whatever your conditions you're trading, right? So all of these things are making it so you're less likely to take winning trades. Why should you be trading if all of these things, logically speaking, you're less likely to take winning trades with all of these things adding up, right? You're anxious, you're stressed. You are. You're fucking feeling it, bro. You are feeling all of these emotions. You're feeling it, so don't lie to yourself, okay? You know that you're trading in bad market conditions. You know that you're losing confidence in your edge. Okay, then why are you trading, okay? Why are you trading over, more size than you should, okay? If you have any of those and you still want to trade, go to a fucking paper trade account. Do not risk capital. If you feel yourself getting stressed, maybe backtest your edge, backtest your strategy. Maybe test what you think the draw on liquidity is by trading on a paper trade account. Trust me, that you will get more out of instead of trading real money, burning your account, and just being stressed and anxious, and then you hate yourself the entire rest of the day because you over-leveraged and you took a fat loss, and then you're mad, and then you come into the next day trying to make that money back, and then you lose more. Because I guarantee you, everybody in here has done that shit. And I have countless times. And I'm here to tell you how to get over it. It's frustrating. Trust me. I've been there. Weeks like this are not fun. Nobody likes to lose, right? But again, that's where we push our ego to the side and say, okay, how are we going to learn from this, right? Because this week was a good learning opportunity. I'm kind of glad this happened. I lost $10,000. It's a $10,000 lesson, right? And I know you guys lost money too. But hey, losing money happens. I'm still up on the month. 1 week is not going to faze me. All this is for me is adding to my fucking knowledge, adding to my fucking brain. This is making me a better trader. Now, you can let this make you a better trader, or you can let this make you a worse trader. It is your choice. Because the person who's going to make it a worse trader is going to say, you know what? Fuck this. I just lost however much money, and they focus on making that money back. They go into the next day over-leveraged, focusing on trying to make the money back. They continue to get stopped. They can't recognize when they're, being emotional. They don't know when to step away, and by the end of the day, their account's fucking blown, their funded's blown, their eval's blown, anything, because you don't know when to step away. You're not using anything past information, and then the exact same thing might happen in the future. You get bad market conditions. There's no correlation between markets, and yet you still choose to take on trades, even though in the past, you've learned countless times that you probably should not take a trade when markets aren't correlated. So this goes with literally everything, not even this week. Any sort of thing that you learn within the markets, whether it be setting your stop too tight, whether it be being over leveraged, lowering your position size, and whether it be recognizing market conditions, understanding PDRAs, whatever it is, if you are not constantly journaling these things, writing it down, saying it to yourself, and when you see it repeat, say to yourself, be like, hey guys, I remember seeing this, like last time this happened, everything was kind of getting disrespected. Guys, PDRAs are getting disrespected right now. I'm expecting the draw to be this, but honestly, Even if I expect the draw to be this, if PD arrays are getting disrespected, that's going to be a lower probability for that to get hit, right? Use those past experiences. Actually say it to yourself. Be conscious about it. If you're not actually writing this down, you're not actually learning from it. That means there's no consciousness with whatever you're doing. You know, whenever, you know, when your English teacher says, you know, oh, you know, you shouldn't be typing on a fucking laptop. You should be writing that shit down. Wait, that's a terrible example because I'm typing my journal out. But when you're actually put in the time to think about it, write down, keyboard, you know, type out your thoughts of whatever it is, that actually sticks with you. That actually sticks with you. And that's why I love doing these charting sessions so much, because I get more value out of doing these charting sessions with you guys than I do journaling. Because this is a time when I get to just fucking go. All my thoughts just flow. All my thoughts just get to flow out. Every problem that we've had this week, everything we did right, everything we did wrong, all of those thoughts get to flow out and you guys get to hear it. And that's why I think it's so beneficial for you guys and for me. I think it's kind of more beneficial for me because I just get to let my shit fucking go. So, this week, do not let it get to you mentally, okay? If you lost money, that's okay. Learn what your mistakes. This is just 1 week in your journey, okay? How can you fix it? How can you make sure that doesn't happen again where you over-leveraged? Where failing to recognize. Or was it just a bad week? Because that happens. Losing is a part of the game. But figure out what you can always do better, right? Messes with your mental. If your mental is shaky, the market can show whatever it wants. You aren't operating the same mentality. To do this, you have to be firing on all pistons. If your mentality is shaky, it's going to recognize that and step away for the day. Absolutely. Always got to recognize yourself. Again, you're feeling it. It's up to you to decide whether to step away. And it's hard. Trust me, it's hard. But you should be proud of it when you do. Give yourself a little pat on the back. If you're guessing and aren't 100% in about taking a trade, then you already lost mentally and already lost that trade. 100% agree. That's good, Blair. Hey, that is the loss that you should take. The thing that was frustrating was that I was confident today on all trades I took. They just went against me. Those are losses you should take because you're taking good setups. You have confidence and conviction with them, and you get stopped. Those are trades you should take. Those are losses you should take, right? You should not be taking just random setups, right, that you don't have conviction in. If you're taking confident setups, the more that you take those confident setups, the more you're going to see which ones are even more confident and more confident. Because you're going to take a setup now that you think is good, and then let's say you take 100 trades of those exact same setup that you think is good. Okay, and then you look at 20 of them, 20 of those 100 that are actually really, really, really good winners, and you can actually see which one of those are, really A++ setups, and then that refinement then gets tuned to that. So your good trades, that 100 sample size of what you think was actually a good trade now becomes that 20 sample size, and you start refining and sharpening, and that edge becomes so consistent and so confident that you just become a fucking beast. That's what it is. That's all it is. That's what gaining experience is. Constantly taking trades, constantly looking at price action. Okay, what's different? What's similar to this? All these things are something that we learn from and sharpens our edge. And the more you trade and the more experience you have, the more that when you see it, oh, I see that shit, I'm entering, right? No hesitation. Everything's lining up. This is my setup right here. Boom. I got to run, Justin, but I appreciate you more than you know. Seeing that you bleed just like the rest of us makes you even more valuable for the human side of things. It shows that these are the things you have to master in yourself to progress and grow. You bleed like us, and you clearly have made this work. We can make this work, too. Just got to focus and grind it out. Yes, sir, James. Have a good rest of your night, brother. That means a lot. High key, a group diary. Yes. It's recording. I'm recording on OBS. If you're not confident, the market will escort your ass right out the door and your money will stay in the market. Yep. All right, guys. That's kind of all I wanted to talk tonight. What do we have tomorrow? Friday going into 3-day weekend. It might be some more bad action tomorrow. Tomorrow bias. I'm still kind of deciding if I actually want to trade tomorrow or not. I might take the Friday off, guys. We might take Friday off. Possibly I might look over markets maybe in the PM, but I might take tomorrow off, especially after this week, right? Especially a Friday going into a bank holiday, right? And it's the end of the quarter. And again, all of these things lining up, it's best to probably not trade those conditions, right? Especially with the action we've seen, and especially with the action we've seen, especially on the last couple Fridays. Not really, not really that kind of action I kind of want to trade, right? So I'll probably end up taking tomorrow off. Exactly. Get a little break in, and then we'll be back. We'll be back. Is Monday half day or is Tuesday half day? They're both. Wait, no, cat. Wait. Why are you taking the day off? Action this week's been bad. It's a Friday. We're going into a bank holiday weekend, and it's the end of the quarter, and it's the end of the month. Tuesday's market closed. So we'll decide on Sunday night when we do our charting session if we're going to trade on Monday. Because we're going into, again, another really sketchy week, so we do want to be careful. A lot of the time, Trey. Oh, yeah. Let's go over the PM session trade. Okay. So I did check a trade in the PM. I only got scaled out a quarter of my trade, and then the rest got stopped at break even. Again, that's kind of what you can expect when you're trading kind of these market conditions. Again, I still wanted to see these lows get taken. We still had these wicks here. I wanted to see this become low resistance. Looking at the 1 minute here on NQ, we were forming SMT on a bigger time frame. We could see ES just came up and swept this high, which was right here. Again, scalp. This would normally be a scalp model, but the draw on ES is higher. So even though the draw on NQ is lower, again, it's going to be probably fakey because they're not correlating here. So we have two SMTs. Once we reject the SMT, I look for that first fair value gap. I obviously take the weaker one. I think the draw on NQ is lower. Ended up coming down. I took off my 25% position here at this inverse fair value gap. I was going to take off another 25 here because we had equal lows. And then I was going to let the rest run to the low. Ended up coming down 25% off, and then we got stopped. So, again, another good trade. I'm totally fine taking that trade, especially when we come up on ES, rejecting bigger time frame fair value gap, looking at the 5 minute on ES as well, right? Tried correlating these things. It's just draw on ES and NQ have been differing, right? That's why we get in bad action. All right, guys. Any last questions? Hey, Justin, so if NQ and ES are not moving together, should I automatically be more cautious or maybe not even trade? Yes, absolutely. Always be more cautious. And I like to think, too, is, again, ES and NQ have been completely showing different things, right? The draw on... Okay, so the biggest thing that was the problem today, and the reason why... this was in our pre-market plan. In my pre-market plan, I said, if we break through this 15-minute... because we have the same thing on NQ, right? We have this 15-minute fair value gap here. Exact same thing on ES and NQ. If ES and NQ continue to hold this fair value gap, the draw's higher, right? ES swept this low, continue to hold. Okay, the draw's higher. Look at NQ. Okay, swept that low, broke through. What is the draw? Lower. So that is two different market biases. You can see NQ sold off, came back up to inverse fair value gap, and then sold right back off again. But at that point in time, ES was literally making a new high. That NQ high is literally right here, bro. We came nowhere near that. So two different completely different actions today. Would waiting to see the reaction of a fair value gap you would normally enter after you get a reaction in your favor and setting your stop at the bottom of the fair value gap be something worth backtesting in your opinion? The bottom of the fair value gap being the bottom of the wick, or the bottom of the wick that originally went in the fair value gap? Would you mind reviewing this trade? Let's check it. It's not about scalp. It's not about scalp. I like that you took TP1 was that 1 minute fair value gap. I like that TP1 was that first fair value gap. It's not about scalp. I would I mean, it depends. A lot of the times if I would to get TP here and we come back up, I would put my stop to break even. You kind of got lucky, to be honest, that this continued to hold, and then we ended up taking that again, external was never even taken today. Other than that, I would just say put your stop to break even, because a lot of this you getting stop or you getting your hit here was probably, again, you want to be careful. But it depends on the trade, right? For this specific trade, I wouldn't have enough conviction to hold. A lot of the times, there's sometimes I won't like, I'll take off half and then I won't put my stop to break even because I have confidence on whatever the move is. But for this specific trade, I wouldn't have confidence that we were going to continue to hold this fair value gap, especially when we came down and held this 1 minute fair value gap, and we came up and then held this fair value gap as well. If we come up, can I draw on this? Yeah, I can. If we came up and then held this fair value gap as well and then bounced up, I would not expect this fair value gap to hold. Oh, gotcha. Okay, good. All right, guys. That's all I have for you tonight. Hopefully, no trading tomorrow. You got Friday off. Everybody take Friday off. Enjoy a little free 3-day weekend. Actually, Monday. Well, I'll see you guys on Sunday. Much love, Ben. Much love, Fish. All right, guys. Enjoy the rest of your day, or enjoy the rest of your night. Enjoy your Friday off. I will see you all on Sunday night for our charting session to get ready for the next week. We come back stronger, guys. This is just 1 week. Trust me. Enjoy the rest of your weekend, guys. I'll see y'all on Sunday. Peace.